Well, guys, we got controversy in Tesla stock land. I mean, we got big YouTubers selling out of some of their positions. You got Wall Street seemingly pushing the stock up, despite the fact that they're actually not as bullish on the stock as you would think that they were. And the opinion on rivals like Rivian is virtually the same as well. So with basically the robotaxi event coming up, the question becomes, what the heck is going on with Tesla stock? Are there some actual good points that Wall Street has that we're just completely missing? And is there a reason to get out of Tesla stock at this stage? Don't worry, guys. We're going to dive into all that. I'm going to get you guys real answers on that specifically right after you hit that like button if you like getting the truth out the hype, because that's exactly what you're going to get today, guys. We're going to have a frank, honest discussion about what Wall Street's saying, what else going on with the stock. So let's jump into the video right here. Let's not waste any time. Let's jump into the video right here and see exactly what Wall Street's saying, and then we'll kind of talk through all the various nuances within that.
All right, let's do some trading. Joining us, Daniel Kearns, the Chief Investment Officer at Nixon Peabody Trust, and Tom Wyatt's here with me in studio, host of Fast Market. As we look at Tesla and some others. Dan, good morning.
Good morning.
It's been pretty fun to watch Tesla. It's been kind of doing its own thing, charting its own path. Generally pretty decent, though, in the last couple of weeks. So what does it need to do to hang on for the ride here?
Well, Tesla's a really interesting story. I think this is a classic case of a company that makes amazing products, but it may not be the best stock. One analyst has called the Tesla shares at their current valuation shares that are divorced from the fundamentals. And I do worry about the level of the stock. This is kind of an I want to believe valuation. About half the valuation, I think, is attributable to the fundamental value of the auto business. But the rest of the valuation I see as an implied call option on things like autonomous vehicles, robo-taxis, industrial robotics, and all forms of AI.
All right, so we'll go ahead and stop it right there. We've talked about for almost a year on this channel that Tesla's valuation is going to go the wrong way because of what Elon said. Elon said margins are going to compress. Obviously, revenue is going to slow. A lot of other things like that. He gave a warning that it was coming, and it's absolutely played out that way. What that means is that every single quarter, instead of the valuation going up, like take NVIDIA, for example, where they continue to increase EPS at crazy levels and revenue to crazy levels, that increases the valuation. Tesla was doing that obviously early on as well. We saw that, hey, they were smashing through every single quarterly number across the board. EPS higher than it was than expected, revenue higher than it was expected, quarter in and quarter out, over and over and over again. But that has not been the case. We have seen EPS stagnate or go the opposite direction. The same with revenue, the same with a lot of other things, significantly slow down and all that sort of stuff. So that's why whenever you see Tesla at 220, it is not the same as Tesla at 220 2 years ago, because we've seen the slowdown in that growth. Now, do I still think Tesla is a better company? Of course I do, than it was back then. But I cannot say that margins weren't higher a year ago than they are right now, because that's absolutely false. Margins are less than they were a year ago. So all those sort of things make up the valuation. And when you're talking about valuation, he's right. The valuation is extremely rich right now, not 2021 rich, but it's far richer because the fundamentals of the company have not done well. So therefore, if you're going to be willing to pay the higher price for Tesla today based upon valuation, you're including a lot of those other sorts of items in your valuation, the robo-taxis and all that other good stuff. You're including that in your valuation. Now, I know a lot of folks got mad at me when I said, hey, my price target is no longer, 200 and something dollars. I moved it down to, in the end, 145 is where I ended up moving it down, based upon valuation and the fundamentals. And guess what? That's exactly where the stock fell based upon that. At that stage, I felt it was undervalued again because of the valuation of the stock, because of those fundamentals eroding, creating a lower valuation. Now, in the future, I think we'll be just fine. But I can't disagree with his argument right now that, hey, I don't want any part of it right now at this stage, at this particular price, because of the underlying fundamentals. And two, he's right. Right now, people that are being willing to pay this and thinking it's a great deal or whatever the case is have to be pricing in those other things. You guys know from me that I'm not pricing in robotaxi. I'm not pricing in FSD, a lot of these other things like that, until we get much closer to them actually coming to fruition. And I can accurately be able to somewhat predict how that's going to impact the bottom line. Right now, everybody is speculating as to what that would be, including Elon, who just throws out random trillion-dollar numbers about random things. I believe what Elon says when he says it in terms of formal guidance on an earnings call. That is when I will believe the numbers that he puts out there. But until we see that, and they're just off the cuff remarks or, you know, crazy in the moment answers, those are all just speculative numbers at that stage. I believe it whenever it actually gets there. And of course, he puts no timelines on that. So does it add $1 trillion? Maybe it does over the course of 20 years. But a lot of folks are taking that as, oh my gosh, it's going to add $1 trillion next year. And that's just not necessarily going to be the case either. So that for me is how I'm viewing it. So I can't necessarily disagree so far with this guy, but don't worry, he's a Wall Streeter, so we'll have plenty to disagree with here.
I like the stock more when the implied valuation is a lower proportion of the stock value. When I think about the fundamental momentum of the stock, we really had revenue growth decelerating, free cash flow shrinking, margins, when you subtract regulatory credits, margins are at 5-year lows. And we've got a flattening of EV demand, and really brutal competition from the Chinese EV players.
Yeah, that's a fair point there. It seems all.
I agree. Can't argue with any of those there. That's the situation right now. Do I think that situation improves? Yes. But just because I think the situation will improve in the future does not make that not the reality today. And that is the reality today.
As big tech companies are running into quite a bit of Chinese resistance and competition at this point, whether it's Apple and Huawei and Tesla, the myriad the other competitors. What's interesting in the past month is, it's not like Apple's down 5%, Tesla's up. It's seemingly catching a bid for some of the robo AI hopes. What do you think they need to deliver to kind of live and thrive in the AI themes?
Well, I think everyone who is a Tesla follower will be watching with bated breath the October 10th robo-taxi event, and to really evaluate whether how much of this is vision versus progress towards a real launch. The one caution that I would
yes, if you're going to watch that event and get into that event, you have to be able to decipher between the hyperbole language that Elon likes to use and the actual valid, tangible, what's the word I'm looking for here? The actual, tangible, this is coming, this is the timeline, this is how much revenue it adds. Exactly like he was saying, vision versus actual hard data, hard details that we can point to and then be able to project out from there. That's kind of what we're looking for with a lot of these events. Most of these events in the past have been very, very much vision oriented. You can say they're not. I remember all the hype around Battery Day. Oh my gosh, it's going to add $1 trillion to the market cap. And here we are. The things talked about on Battery Day are kind of coming, kind of not. Definitely have not had the impact that everybody thought that they would have, because it was much more of a vision event than it was an actual, this is what we're doing next kind of event. Same exact thing that we may see right here. We'll see if it is different. Obviously, I'm hoping that it's different. I'm hoping that we get something that is much more less on the vision side and much more on the execution side, but we'll have to wait and see. But that's kind of the lens that I'm viewing it towards, because you can announce the most mind-blowing vision ever, and it means absolutely nothing if it's 10 years away in regards to stock price, in regards to what I should pay for a stock, and other things of that nature. So kind of keep that in mind as you're watching these events. It's okay to view it as a consumer and as somebody who's a fan of Tesla and you want to get excited about it. But if you're thinking about the stock, you have to take that hat off and put on your investor hat and go, okay, what is the bottom line impact over the next year in regards to this announcement, in regards to the things that they're talking about there? If you can't draw a tangible conclusion to it and it seems far off, or it seems like, wow, they've really, really got to jump on things just to get this in a year, much less than 2 or 3 years. At that stage, it's much more vision than it is reality. And therefore, I would not personally start adding those type things into my valuation. Now, they push this event back. Maybe there's more they're going to be able to get us. I don't know at that stage. I just know that that is definitely how the lens that I'm viewing it from is as an investor, not as a fan, not as what it means to the future of Tesla. As an investor, what does it mean? Because unfortunately, people wanting to buy Tesla stock right now, that's what matters, is that what does it add tangibly to the bottom line? Not, is this great for the future? Possibly, if it happens, if it goes through, if everything works out, great. Very, very different there. So you got to kind of keep that in mind as you're watching events like that.
Is when it comes to the robo-taxi unveiling, is the timeline for them to realize revenues from this there are major regulatory hurdles for them to offer robotaxi service. And I question whether Elon Musk is the best suited CEO founder to navigate through a very challenging regulatory environment.
Okay, so I'll address both of those there. Um, I remember when Robotaxi or FSD, whatever you want to call it. Actually, I guess it was FSD first, then Robotaxi. When that was picking up a lot of steam, I took a lot of heat for saying that's years away. Not necessarily just solving the tech, which is hard enough as it is, and it just you can only make next year promises so often to where it's kind of like, okay, this is years away. Two, it has to go through all the different regulatory hoops. I am shocked by the number of folks that just think, oh, he's going to solve it. And then the next day it's going to be legal across the entire United States, every county, every state, every municipality. And it's not going to get caught up in any sort of politicking whatsoever. And this was before he kind of, bought Twitter and kind of went down that hole. This was before that time frame. I was saying, this is crazy to think this stuff isn't going to get caught up in potentially years worth of litigation and wrangling with all the various entities across the states. Now, I understand in Europe, it's very, very different. Obviously in China, it's very, very different. I'm just talking about here in the States, which is where the vast majority of Teslas are sold. That was something I absolutely felt was going to be a giant hindrance to FSD, was just navigating those regulatory areas of the product. Now people are finally starting to come around to that, but I still hear it sometimes. Oh, nothing. It's just going to get approved. People are just going to see it saves lives and they're going to approve it. And I'm like, man, you need to take a hard look as to how things actually work here in the US. And just because something is better for us as consumers does not mean it's going to get passed or approved or made into law or whatever the case is. There's a reason why our food source is terrible. I think Europe has something like 5,000 chemicals that are banned in their foods that are allowed in our foods that create all kinds of problems with your body. Just is what it is. That is part of our system. I'm not saying it's right or wrong. I'm trying to deal with the reality here. And the reality is this is going to be hard to pass from a legislative standpoint across the board. It's going to take time. Will it get there? Absolutely. It's just going to take, in my opinion, a period of years to get there to where we see it at a scale to where we start to see mass profits coming in to Tesla. Because just announcing it isn't enough. Just having it as an option isn't enough. It needs to be approved and at scale to where we start seeing impacts to the bottom line. That's when it will start impacting the stock. More importantly, the valuation of Tesla stock itself. So for me, it's coming. It's just a little bit longer than a lot of folks want to do there. And in regards to that regulatory piece, it's something that wasn't talked about a whole lot back in, 2-3 years ago. Now people are starting to try and figure out that, hey, yeah, that is, it's going to get talked about. Now, is Elon the right guy to navigate that? I like to think that he is such a sharp guy that when it comes down to getting those various approvals, he will tone down his behavior and do what needs to be done in order to get that taken care of. And that may not happen publicly on Twitter or X or whatever the heck it's called. That will happen behind closed doors in sit downs with those particular politicians and such, and all the various folks that he's got to navigate through in order to get that done. I do believe that he can navigate that. He's plenty smart enough to do that or to hire somebody to handle that for him. So I do believe he can absolutely handle it and be the right guy in order to do that. But I understand some folks may be wanting to question, not really sure given his recent behavior. But again, it's Elon being Elon. And I think when it comes time to make those decisions, i.e. it's close, I think some of those things will kind of be backed away from to kind of clear some of those hurdles that he's going to have from a regulatory perspective.
He's gunning for a regulatory position, possibly, and a presidential admin. So he's got that going, I guess, on the side. Hey, Dan, what about the competition here in the U.S.? Anytime I tweet out anything about the Cybertruck, which I did over the past week, there's always people chiming in saying, truck people hate that thing. Rivian's the way to go, which, like, I can get. We see a lot of them around, and they're pretty great vehicles, too. But, like, the cash situation, the profitability situation, why would anyone own a Rivian shares over Tesla shares, even if you do like the car?
Yeah, I can't argue with you there. I think Rivian's making really cool products. The stock has been anything but cool, selling in the neighborhood of $13, down from its peak of 172 in 2021. The products are cool. I would say that with the Volkswagen equity infusion, that reduces some of the funding uncertainty for the rollout of the R2 and the R3. So they've got a little bit longer runway to get to a better cash flow position. and certainly Volkswagen's investment provides some validation of the Rivian model. With that said, we're looking at probably 2026 before they get to a sustainable level of positive EBITDA. They've got liquidity that may carry them through 2027-ish. Lower rates will help the story a little bit, but this is very much, in my view, very much a show me story. Buy the car, buy the SUV, maybe don't buy the stock just yet.
All right, so we'll go ahead and stop the video right there. In regards to Rivian, I shockingly, I agreed with almost everything that was said in this video. Yeah, cool vehicles. I don't know, the front to me looks kind of kiddish. Looks like a kid's toy in the front there and such. But in terms of it looking like a traditional truck and appealing to more truck owners, absolutely see if you want an EV, why that would absolutely appeal for you. Now, of course, I like the Cybertruck better, but it's just because it looks like an 80s sci-fi toy. You know, it's ridiculous in terms of its looks. That's why I think it looks cool. But I'm not a good indicator of what the average truck buyer will buy as well. But he's absolutely correct. There's no reason to own a stock where there's not a clear path to profitability. They need more cash infusions, possibly, in order to make it, in order to actually turn that profit in the future. So it is firmly in the speculative category, as opposed to Tesla is firmly in the growth category, obviously in a cyclical downtrend right now. But cyclical means there is another side to that. And whenever it goes, that growth story should continue. But more importantly, they're profitable regardless. So you're not worried about Tesla going out of business. With Rivian, you could have a bankrupt stock on your hands. So it doesn't matter how cheap it gets. It doesn't matter what the potential is, or actually whether or not truck owners like the vehicle or not. If you can't figure out how to turn a profit, it doesn't matter. It is a bad investment. I don't care how cool the product is. It is a bad investment if they can't figure out how to turn a profit. And so far, you know, they've been at it for a while now. They have not figured out how to do that yet. So maybe a stock that you want to watch, but until you start seeing clear signs and a clear path to profitability, to me, it's a stock I'm just going to stay away from. I have no reason to speculate in the EV space, and I see no reason to do that now. Now, in regards to Tesla and overall my feelings on Tesla, you guys know exactly how I feel. It is, I don't care who's selling. I don't care why they're selling. It's totally irrelevant to my plan, what I'm doing, everything else. I am not a trader, so I have no interest unless I don't want to own as many shares as I own right now of Tesla. To me, trying to trade it out is a fool's errand. You will lose over the long run trying to get in and get out and try to add shares here and get shares. Sure, it may work this first time, but then when you do it the second time, it's not going to work out as well. Ask all the Palantir folks that played these same exact games based upon what YouTubers were doing. Oh, I'm selling at 10. It's or 12 or whatever the number was, because it's guaranteed to go back down to 7 because this YouTuber said it was and that YouTuber said it was. And then it went right up to 20 after that. Now we're sitting at 35, and those folks were chasing constantly the entire time. It just, now it may have worked the previous 4 times that they did it, but that one time that they didn't do it, now they're left buying shares at a much higher average, and it ended up probably not netting them a whole lot in the end, as opposed to, you know, somebody using my strategy or just doing a simple DCA. You just have a lot more shares than a lot of other folks had. Even if you started off with a poor average, because you were able to average down for so long, you now have a great average. And statistically, it's proven through studies. We have studies in our group where we have individual members that have done it with individual stocks, with index funds, with all different kinds of ways. Getting in and out is virtually impossible to do. And more importantly, even if you do it remotely correct, you still end up losing to somebody who just holds and just adds on the dips. Just statistically, that is how it works. And you also lose out to just those DCAers out there who are just DCAing. So for me, no reason to change my position on Tesla right now. To me, it's a little bit overvalued. I'm going to wait for it to dip back down if it does and add more shares. If not, I have a full position and I'm perfectly happy. But I'm under no illusion. I don't want to play any sort of trading games or anything else like that. I want more shares of Tesla for that future, not less shares of Tesla for whatever that future is. And I can't get there by selling. So just my thoughts on it. And if you want to see my complete watch list with price targets to include Tesla, one of you want to see anytime I'm looking to add Tesla, buy Tesla, you want to go through Tesla's earnings calls in real time with me and go through all the analysis and everything else that goes on with that, what I'm listening for as a 25 plus year investor's ear as I'm listening to those earnings calls, and you want to get your free coaching, take the free courses, use the free stock analyzer tool. Guys, there's so much involved. If you made it this long, I may have left something special for you down there in the pinned comment down there. Check it out. See what I left for you and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.